Picture this. While everyone's obsessing over Black Friday deals and holiday shopping lists, the retail apocalypse just revealed its next victims. And the winners? They're not who you think they are. Right now, as I'm recording this, we're witnessing something fascinating in American retail. Three major stories broke yesterday that, when you connect the dots, paint a picture that's going to reshape how we think about consumer spending, market cycles, and what it really means to survive in today's economy. TJX companies, that's TJ Maxx, Marshalls, and their international brands, just crushed earnings expectations and raised their outlook for the holiday season. Meanwhile, Target slashed their profit forecast, citing soft demand and the need for more markdowns. And hanging over all of this, Nvidia's earnings report that has the entire market holding its breath, with the S&P 500 suffering its worst losing streak since August. Now, here's what every mainstream analyst is missing. This isn't just about retail winners and losers. This is about the fundamental rewiring of American consumer behavior, and it's happening faster than anyone wants to admit. Let's start with TJX, because their success story is actually terrifying for the rest of retail. Their CEO called the holiday season off a strong start, but dig deeper into what that really means. TJX doesn't just sell discounted merchandise. They build the most sophisticated treasure hunt experience in retail. They're not competing on price alone. They're competing on the psychology of discovery. Think about it. In an era where consumers can instantly compare prices on Amazon, where subscription services deliver everything to your door, TJX has created something irreplaceable: the thrill of finding a designer item at 70% off. But here's the kicker. Their inventory model is essentially betting against every other retailer's ability to predict demand. When Target has to mark down merchandise because they miscalculated consumer preferences, excuse me, that's TJX's game. And this brings us to Target's pain point. They're not just dealing with soft demand. That's corporate speak for something much more serious. Target built their entire strategy around being the upscale alternative to Walmart, the place where you go for affordable luxury. But what happens when consumers decide they want either true luxury at discount prices, hello, TJX, or just the absolute lowest prices possible? Target is caught in what I call the middle market squeeze. They're too expensive for price-conscious shoppers who are dealing with persistent inflation, but they're not exclusive enough for consumers who want genuine premium experiences. Their markdown problem isn't just about inventory management. It's about a fundamental misreading of where American consumers are mentally right now. Because here's what the earnings reports aren't telling you. American consumers have become incredibly sophisticated about value. We're not in a recession, but we're not in a normal expansion either. We're in something new, an era of selective spending where consumers will splurge on experiences or genuine deals while ruthlessly cutting everything else. And that's happening across the board. This is where the Nvidia story becomes crucial. Everyone's focused on whether AI demand is sustainable, but they're missing the bigger picture. Nvidia's earnings don't just reflect tech sector health. They're a proxy for corporate America's willingness to invest in future productivity versus cutting costs today. If Nvidia disappoints, it signals that even tech companies are starting to pull back on growth investments. And that's going to affect everybody. Also, that creates a feedback loop that's already showing up in retail earnings. When companies tighten their belts, employment markets soften. When employment markets soften, consumers become more price sensitive. When consumers become more price sensitive, retailers like Target get caught in the squeeze while treasure hunt retailers like TJX thrive. Excuse me. But here's the part that's going to shock you. This isn't temporary. What we're seeing is the emergence of permanently bifurcated consumer market. On one side, you have shoppers who learned to game the system. They know when to shop TJX for designer finds, when to wait for Target clearance, when to splurge on experiences. On the other side, you have traditional retailers still operating like it's 2019, trying to predict demand and maintain margin through conventional pricing strategies. The stock market's 4-day losing streak isn't just about Nvidia anxiety. It's about investors slowly realizing that many of these business models they've been betting on are becoming obsolete in real time. The companies that are winning, like TJX, have business models that actually benefit from other retailers' failures. That's not growth. That's wealth transfer. And here's what nobody wants to admit. This trend accelerates during uncertain times. When consumers feel economically anxious, they don't just spend less. They spend smarter, they research more, they wait for better deals, they're willing to hunt for value. This creates a permanent advantage for retailers who've built their entire model around unpredictability and discovery. So, while everyone's debating whether we're heading for a soft landing or even a recession, they're missing the real story. Excuse me. We're already in a new economic reality where traditional retail metrics don't apply anymore. Same-store sales growth, predictable seasonal patterns, traditional inventory cycles. These are becoming as obsolete as mall anchor stores. The retailers who survive the next 5 years won't be the ones with the best locations or the most sophisticated supply chains. They'll be the ones who understand that modern consumers want to feel smart about their purchases. They want to win the game of shopping, not just buy products. This is why TJX success should scare every other retailer. They've turned shopping into a skill-based activity where their consumers feel accomplished, not just satisfied. Meanwhile, Target is learning that being reasonably priced isn't a strategy anymore when consumers can be either extremely price conscious or selectively premium. The question isn't whether this trend continues. It's whether traditional retailers can adapt fast enough to survive it. Because what we're really witnessing is the gamification of American consumer culture, and most retailers are still playing by the old rules. So, here's what I want to know. Are we looking at the smartest generation of consumers in history? Or have we created a shopping culture so complex that only the most sophisticated retailers can survive? And more importantly, if you're an investor, are you betting on the companies that benefit from chaos or the ones that need predictability to succeed? Don't forget to like this video, subscribe, and hit that bell so you never miss an update. Your support lets me keep bringing you more content just like this. I'll see you next time. Bye-bye.